So today it happens to be Monday the 9th of March, which means it's a brand new week. It's a brand new vlog. So this is week 24 of the road to 50k. So, am I going to give some aspects on how the journey is going so far? No, because it is going terrible, but it will start to pick up soon enough. Last week on the vlog, I ended up burning through 13 trading combines on Monday. I then purchased another 3 on Monday. I passed them. Then ended up blowing the accounts on Friday. I then bought 3 more accounts on Friday. I got max profit on the day. This morning, in Asia session, I hopped on the charts to pass the accounts. I passed them. Today, on New York AM, I opened up the charts with 3 fresh express accounts to copy trade, and here is the damage that we've dealt on them. So, opening up the morning, no trades taken on these accounts. These are fresh accounts. Currently, we're up $707 on each account. Well, not currently. The end of the day. Well, obviously the day's finished, but here's the trade. Pretty simple. Let me just go through a quick little trade breakdown right now. So give me one more second. And here is the trade that we took today. So simple trade, easy continuation to the upside. Enter them with 4 micros at this point, risked $263 and came out with $707 on each account. So total profit for today is $2,121. So without further ado, let's just get straight into the trade recap. So getting the chart executions off first is essential. So then, 4-hour time frame. What can we see on the charts? We can see that throughout all of the consolidation for the past 3 months, we have finally swept out November's low, completing our market maker sell model, finally granting us the ability to look for external high time frame longs on the market. So as well as the market maker sell model getting completed on NQ, it actually did not get completed on ES and put in an SMT with it. Now, upon an SMT with a market maker sell model completion, do we expect a massive reaction to the upside? No, we don't, but we're going to play with it in our favor, because now that we have completed the sell model, we're looking for buy side liquidity to get swept. So if we go to the 5-minute time frame, we can see that upon the market maker sell model getting filled, we swept out previous week's low. We also swept out previous month's low, and then obviously we got the market maker sell model, meaning we've got no high time frame sell side draws on liquidity left. We're looking for buys, so draws on liquidity for today. Asia low, London low, 4-hour value gap. What do these draws on liquidity show us? They show us that now that we have been granted the ability to move to the upside, price is moving to the upside with force. Price is not sweeping out Asia low. It is not sweeping out London low. It is not tapping into 4-hour value gaps. It is just sprinting to the upside, trying to fill this new week opening up and trying to explore price to the upside. So upon market open, I was not actually on the charts. Price did wick into the new week opening gap, but unfortunately I wasn't on the charts at that time, and probably it was even better that way because I didn't have to go through all of the squabble of this chop for the first, for the second 45 minutes of the market. So me hopping on an hour and 10 minutes late, I hopped on at this point. I was trying to fish out a bias. I ended up finding that we were longing the market around this point, but I ended up entering the market here. So how did I enter the market? Our draws on liquidity for today were just simply the new week opening gap. We can look on the hourly time frame. We can see this massive hourly for value gap. We can see all of this built up liquidity to the buy side, to the upside. None of that is key. For me, the only key draw on liquidity is new week opening gap. So as long as that has not been filled, we have got opportunity in the market. So going to the 5-minute time frame, we can see that we're already displacing heavily to the upside. We are showing no signs of remorse. We're showing no signs of a retracement. That means that as soon as we get a retracement, that is when we're looking for a key reaction on the market. So marking out these two 5-minute for value gaps. I ended up seeing that price came into this one. ES did not, creating an internal SMT. What are my credentials to enter in the markets? Or sorry, what are my credentials to enter? What is my criteria? What is my entry criteria? Confident draw on liquidity, SMT, trader state delivery, and an internal manipulation. On the charts, what can we see? We have got we're in a buy trend already, so we're targeting a very confident draw on liquidity being higher as we're just trading with the trend. Tick. We've got our SMT. Tick. Now all that we need to do is see some kind of internal manipulation and a changing state delivery. So seeing that price is holding this 5-minute for value gap, we wick into it once, we reject it. We wick into it twice, reject it. We wick into it one last time and we reject it. We can see that there is a very, very, very high likelihood that price is just going to continue to the upside. As we can see, price has had zero remorse for high time frame retracements throughout this whole leg. Why would we retrace lower now? Exactly, that's my point. We can say that internally, this is our manipulation leg into this 5-minute for value gap, price wicks into it. Or you could even say probably this is a manipulation leg here. But anyway, as soon as price comes to the upside and breaks 1-minute structure internally, that is not enough for me to enter the markets. So I end up waiting for another candle to get produced so that I can see where the momentum is going. As soon as we close above this changing state delivery, I see us come back into it. We then trade lower, and as soon as price in the first 30 seconds of the candle push back higher after wicking into it, I enter the markets around here. I put my stop loss at the most recent internal low because we're in an uptrend. We have no reason to retrace lower. I then target new week opening gap. Could I have targeted taking partials? 100%. Did I do it? No, because I had full conviction in the charts. Overall, I entered off of price holding this 5-minute for value gap, price put in an internal SMT with this low, price bro structure to the upside. We're trading with the trend. Our trend was our friend, and that is an easy continuation long to the upside. So that was a great trade recap. That was a pretty simple one. And yeah, it's been a great day today. So let's just continue it being this for the rest of the week. This week, it is all about me getting back on track. For the last Friday was screw up day. Didn't do anything productive, and I blew my accounts. Saturday I was in bed all day. Sunday I was in bed all day. Haven't been to the gym in 4 days. So tomorrow's going to be great. And yeah, I'm looking forward to having having a great week on the markets and as a whole. And that is yet again another day in the books. Right now it is 8:20 on Tuesday. Today it's been a mildly successful day. Started off all right. Got a workout in. Came home, did some gardening. At 12:30, I had a driving lesson for the first time in 6 months. And I finished that driving lesson at 2 p.m. If it was New York time, that would equate to 10 a.m. So as soon as the 10 a.m. candle opened, I got home 5 minutes later from that. Ended up placing 2 trades today. Both of them lost, unfortunately. The first trade I took, completely happy and justified with what made me take it and the loss it produced. I was happy with my actions going into the trade and going out of it. I then went on to place a second trade, which was pretty stupid. It was practically just throwing dollar bills in the bin. I mean, thoughts behind it was literally just, I'd already made a 0.5% loss on the day. The max I'm allowed to lose right now is 0.75%. So that means I've got 0.5% to risk on my first trade, and then I've got 0.25% to risk on my second trade. But rarely will I ever actually take that second trade, because majority of the time, if my bias is wrong, then price will show that it's wrong. And today I didn't take the hint, so this is what my chart's looking like. First trade was great. I mean, looking at the chart, yeah, it is complete arsehole behavior, the fact that we produced equal lows at my break-even point. My break-even point going into this trade was this significant low. As you can see, we wicked into it. We produced another wick right aligned with it, producing equal lows, and price failed to break through. And we just came straight up to my stop loss. Now, thoughts behind this trade, I'm not going to do a trade breakdown because it is not worth it, just like I will not break down losses because they're not worth it. Going into the morning, we've got London highs up here. We have got Asia lows down here. We've got significant low here, low resistance liquidity here, significant low here, low resistance liquidity internally. On top, we have got lots of low resistance liquidity up here with previous week's high resting above, obviously. But I was bearish on the day because at the point at which I hopped on the markets, which was here, price was trajected to go to the downside. When NQ was here, aiming for this significant low and this significant low, ES was already next to Asia low, so let's just anticipate the fact that, or let's just pretend that price on NQ has already swept out this low and it's making a move towards Asia low. You can see how small the distance is between them. You would expect ES to go and take that low. That is not what happened, as well as NQ creating equal lows. Price came to the downside, wicked into this low. ES failed to take Asia low and just projected to the upside. So, look, could I have done better on the markets today? Yes, I could have. But at the same time, I followed my risk plan. I didn't overtrade. I didn't try and make money. I didn't try and make the money back that I lost. I did the majority of shit that I could. I journaled the trades, which is something I need to work on a lot more nowadays because I haven't been doing it. And it gets to the point where if you're in a losing streak on the markets and you end up blurring your accounts and breaking your rules, you find that you don't want to recap those trades because they're nothing to do with your system and they just put the percentage statistics down, even though they have no relation to the trades that you take. But look, man, you got to start somewhere. I've got to start putting these trades to work. I've got to start racking up that data. But anyways, it's been an okay day. Tomorrow I'm actually going up to London with my dad, so no gardening after I go to the gym, no markets at home. I think I am going on the markets tomorrow. I was thinking about putting one account on CPI, but I probably won't be doing that. So anyway, I am finished for the day. Haven't really done much today, but at the same time, I've done the majority of stuff I need to do. So this is H clocking out of Tuesday, and I will see you tomorrow. And that is the end of this week's vlog. Barely filmed anything. Little recap on how the week went. Started off on 3 Express accounts. I had them for Monday, Tuesday, blew them on Wednesday. I then bought another combine on Wednesday afternoon, got max profit. Traded it on Asia session on Wednesday night, got max profit and passed it. Currently on the account, I'm sitting up a total of $5,600, which occurred from $5,400 on the Thursday, which was a pretty easy trade, and I completely fucked up Friday, but I still got a winning day, which is all that is needed. So it's been a bad week for me. I've ended in a alright spot, so I know there hasn't been anything in this vlog and my fault for that, but yet again, emotions got in the way. I went up to London a few times as well, but it's time for me to change.